Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of GBPUSD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. It's the 1 hour chart of GBPUSD in front of us, and as we all know, that pairs like GBPUSD, EURUSD, gold saw massive fall on Friday after the NFP. This is the 4-hour chart of DXY, and we saw massive recovery on the chart of DXY, and ultimately DXY closed at 102.99. And the reason is, here you can see dollar jumps after monster job report. The dollar jumped on Friday after data showed that US employers added significantly more jobs in January than economists expected. The expectation was around 187k jobs, and the number turned out to be 517. It was a massive difference. So as a result, DXY started flying. As I have already mentioned in my previous videos also, that for DXY, if DXY really wants to recover, then the next resistance will be 103.50. Until unless DXY crosses 103.50, we cannot be sure that this is a trend reversal, because overall if you look at the chart of DXY, then yes, dollar is still under the dominance of sellers. So the next resistance for DXY will be 103.50. Okay, now let's have a look at the chart of GBPUSD. GBPUSD, as expected, broke all the supports and ultimately closed at 1.2050. This is the last traded price of GBPUSD. Monday market opening will be very important. Okay, after the market opening, just observe how the market reacts, whether the market is trying to recover or the sellers are still dominating GBPUSD. So first of all, look at DXY, what DXY is doing, or what dollar index is doing. If you see the fall continues, you can take a sell position, but keep in mind already the market is very much oversold. The market has already witnessed heavy selling, and probably, as we all know, that no market in the world goes up in a straight line or goes down in a straight line. Market always needs to retrace. So already market has witnessed heavy selling, so market will be going for some retracement also. So taking a sell position, if the sell continues, can be very risky. If you are willing to take the risk, then that's your personal choice. But I will not comment on that. Okay, but for me, in this type of market situation, sell on rise will always be the best strategy. So if the sell continues, then the first support on the chart of GBPUSD will be around 1.1944. This will be the next support, or the first support on the chart of GBPUSD. Okay, why we're considering this support here? To understand the support here, we need to move to a higher time. I have switched the time frame to 4 hours, and you can see here, okay, we have used Fibonacci, and here is our Fibonacci 23.6% retracement level. Fibonacci 23.6% retracement is not a very strong level, but still we are considering it. If the volatility of the market remains normal, if we see the market is trying to take support, we can definitely go for a buy position. In case market breaks Fibonacci 1.1944, do not take a sell position immediately, because we have the next support around 1.1850, and this is a whole support zone for us. Okay, so if market fails to take support around 1.1944, don't be take a sell position or bias towards sellers. Okay, just wait for the market to come down to 1.1850. Hopefully market will be taking support around this area. Okay, so these are the levels we need to keep our eyes on if the market starts falling on Monday as well. And if market tries to recover on Monday, then our first level will be 1.2130 to 1.2140. Here also we have used Fibonacci. Along with that, we also have the trend line, which was the previous support. Now the same trend line will be acting as the new resistance. So in this particular portion of the market here, we can expect 1.2130 to 40 will be acting as resistance. If market goes up and reverses, we can look for some sell position. In case market breaks it, or if you see the market is going up with big red candles, dollar is falling again, then obviously the level will fail. After all, no level is permanent in the market. Okay, keep in mind always. Then observe the market around this next resistance, 1.2200 to 1.2185. This is our second resistance. And why we're using this resistance here? Because you can see here we have Fibonacci 38.2% retracement here. Then market has bounced previously. Along with that, we also have the 200 moving average. So if we combine all the factors here, there is a possibility that this level here, 1.2200 to 1.2185, will be acting as the sub resistance for the market. If market goes up, struggles around this area, if you see prices being rejected from above, market forming shooting star pattern, bearish engulfing pattern, that is a confirmation that yes, the level that we have derived from Fibonacci and 200 moving average is correct, and you can go for a sell position. So the market opening will be very, very important. My dear friends, market was extremely volatile, so please be careful. This is my analysis. I can be wrong as well. After all, no trader is 100% accurate. So please follow proper risk management. Do not gamble with your hard-earned money. As I always say, capital protection should be the first priority of any trader. So don't forget that. Bye-bye. Take care.